Good morning, folks. This is Naim Azam, Chief Market Analyst at AvaTrade, and welcome to our daily technical analysis video. In today's segment, we'll be discussing about Forex pair, and of course, by that we mean the euro dollar, because obviously the euro has shown a strong resilience against the dollar, and we'll have a deeper discussion in terms of those price levels. As always, it is important for us to go through this disclaimer, which is right in front of you. If you have any further questions, please feel free to ask me. Now, as always, we are going to bring out the MT4 platform, which can be downloaded from our website. So, in order to start this particular analysis, we will begin it by looking at the daily time frame. And on the daily time frame, we have the following indicators. Number one, this particular band that you are seeing over here is called what you call a Bollinger Band, and then after that we have three important moving averages. Number one is your 50-day simple moving average shown in pink, and then followed by that is your 100-day simple moving average shown in yellow, and finally your 200-day simple moving average. Now clearly the price is trading below all the three important moving averages, and more recently the price did try to break above the upper band of the Bollinger Band, but that wasn't really that successful. Generally speaking, whenever the price crosses above the upper band of the Bollinger Band, it usually follows by a sell-off, just like how we have seen it over here, just like how we have seen it over here as well, and just like we have seen it over here as well. So the price can really reverse its direction as long as it is trending, because usually in the sideways price action, just like how it is over here, the price still kind of returns back towards its normal mean, which is again your 20-day simple moving average, but those movements are not that immense, are not that big. So that means that the prices are more likely to have a more meaningful impact when they are trending and when there's a piercing of the Bollinger Band. But obviously the upper level of the Bollinger Band tells us that okay, it's time to sell, and the prices can fall at least towards that middle line, which is your 20-day simple moving average, or they can continue their journey from there onwards and then move all the way to the lower line of the Bollinger Band by really piercing the lower level of the Bollinger Band. And on the flip side, when the price does pierce the lower level of the Bollinger Band, this is an opportunity to get back into the trade on the long side. And then as you can see that the trade has worked quite well. If you had a long position over here, similarly if you had a long position here, and again if you had a long position over here as well. And when we look at historically, when the price moves are massive, again we see it that the price pacing to the upside and the price moving towards the downside, giving us that opportunity that we have been that one could have been waiting for. Right now, in terms of the RSI hasn't really reached that oversold area of 70, and it is not even close to its overbought area of 70 and oversold area of 30 as well. So it is kind of working near its overbought area, but again, that is not fully confirmed yet. Now, in terms of our support zone, we are going to hold these particular price levels, which is in between, I'll say 115 to 116, I mean like 1.1624 to 1.1590. But of course, we can have another support zone as well before that, and then that could be, guys, could be just near the lows of this particular price action. And then what we could do is we can bring another one of these trend lines on the upside, and there we go. Now we have a price action which tells us that we have two different support zones. The first one is right over here, where we are likely to see more sort of a buying opportunity coming into the market. And then after that, we have another support zone. Let me just zoom into those ones to show you guys. So the first one is 1.1590 to 1.1635. The second one is between 1.1710 to 1.1778. Now, as for the flip side, meaning if the price continues to move to the upside, then we are potentially looking for the price to realistically meet these sort of a particular price levels. Again, I'm going to take my resistance zone lines just there to show you guys. So it's going to be just right on top of this particular candle. Let me just bring this one down a bit. So this is where it is going to be as our first area of resistance that we should be targeting in. And once again, we can zoom in to see the price action a bit more clearly. Again, that is between 1.2183 to 1.22. Now, on the fundamental side, we do have the US inflation data, which is going to come later on today. And also from tomorrow onwards, we will also see the beginning of the European Central Bank meeting about its interest rate, and the decision will be out on Thursday, almost midday. So really a lot is happening which can really move the prices anywhere between these zones that what we have mentioned over here. We'll continue to monitor these price actions and come back to you with more update. That's all for now. See you guys next time.